Hi, welcome back to the channel. Now, in this month's analysis, I am going to walk through a really high-level broader market overview. I will be covering all of the major indexes and the asset classes. I'll be covering the RIPs and mega cap tech, potential rotations in the market, and I also have around 20 individual stock ideas for your watch lists going into July. Now, it has taken around 20 hours to prepare, present, edit and upload, so I do hope you find a lot of value from my hard work. If you're new and you've just stumbled onto my work, hopefully the Scottish accent isn't too difficult to understand. I'm feeling incredibly refreshed after my trip to Hong Kong a couple of weeks ago, and I've got a lot to get through this month. But before I get into the charts, the market over the last month has been pretty choppy on a stock by stock basis, but if you worked with my charts last month, hopefully that helped you out a little bit. We are starting to see the early signs of another potential rotation, so I will be covering that this month. I know everybody is complaining about AI and Nvidia bubbles, and I'll be covering that also. But it has been a largely mega cap tech led market over the last few weeks. I think most of us probably see that, but the way that I also learned it is that the best players really should be scoring the most points. So I don't really have a problem with what we're seeing at the moment, but I will be getting into a lot of the nuts and bolts of it in the next few minutes. Now, for disclosure, myself or my clients may already hold positions in some of the names mentioned, but I have highlighted disclosures on the charts. If you're new to the channel, I like to use a combination of technicals and fundamentals. I'm a huge advocate, as most of you know, of systematic process. I don't use any magical Harry hindsight indicators. I timestamp absolutely everything, which is massively important for the field in which I work. I'm one of the very few who go on the record with the work. But my work is for pretty much everyone. If you are an investor, a trader, if you trade options, if you are a financial advisor or a money manager, you'll probably find a lot of value from the analysis that I'm about to walk through. But my work is not geared towards buy and hold forever, unfortunately. I am looking for structural trends in the market that will last weeks to months, and I like to use logical targets and big price levels. If we sat and had a beer together, I tell you that I'm personally more of a technical investor, but my work does apply to all styles. I've got clients at most of the major investment banks now, and if you do stick around to the end, I've also got a bit of an announcement to make as well. But please do pause the video. Very important disclaimer. Also, please do smash the like button and subscribe. It all helps with the YouTube algorithm, and it really does help to get my work a lot more noticed. But as this is an analysis for July, I think it makes a lot of sense to look forward to potentially what seasonality might indicate. Now, as I'm sure most of us have noticed, this is a seasonality chart, and as we can see, June for the NYSE Composite, which is one of the charts that I prefer to use for the broader market. I know there's many of you that will use the S&P 500 because you're benchmarked against it, I get it. But for me, I like to use the NYSE Composite, and what we've seen in June is just a lot of chop. We're down 0.4% on the month for the NYSE Composite, whereas, as we know, with the mega cap tech led S&P, the Qs, which have had really solid months, under the surface the market has been a little bit choppy, a little bit dicey. But July looks a lot more favourable when we assess the seasonality going back over the last 35 years. So I am hopeful that we can get a more broader based participation, I think would be the word to use. The individual chart for the NYSE Composite is exactly the same as it was last month. If you've been using my charts over the last few months, you'll know that I've been highlighting the range bound market that we're currently in. So if you're wondering why your stocks are chopping about sideways, it's because the NYSE Composite is chopping sideways. I think most professionals understand this, but this is in an environment where a lot of breakouts fail. You're seeing a lot of weakness under the surface with a lot of stocks. The Dow Jones is exactly the same. It's mirroring the NYSE Composite at the moment, chopping about in a messy sideways range. I think there needs to be some kind of resolution from this range higher to really get, you know, the major indexes again getting a little bit more broader participation. But the S&P 500 just continues to climb higher. Now again, if you've been working with my charts over the last year, you'll already know that I've went on the record with upside targets up around 6,700. Now, I put out a chart to Twitter over the last week that got a lot of attention, kind of went mini viral, and got a lot of pushback on it, and I get it. There's a lot to navigate over the next 6 months. We know there's a US presidential election. It's going to massively move markets. So whether or not we get this 6,700 this year, when I put out this chart originally, I thought it would be a 2-year endeavour, but we're already halfway to target this year. So it wouldn't surprise me to see some kind of blow off top at this point, but at the end of the day, the message that I've been putting to our clients over the last few weeks is really just focus on the individual stocks, not to overthink the indexes too much. There's generally a warning signal in advance for any kind of corrective phase or any kind of crash. Again, I've gone on the record in advance of crashes and corrections, and I'm able to get it nailed down within a few weeks. So I'm not really seeing any major signs at the moment that there is some kind of corrective phase imminent. We've got the Russell 3000, looks like it's going out at new closing all-time weekly highs today. Now, one thing to say is the market is currently in session. It's the last day, the last trading day of the quarter, so there is going to be a lot of shenanigans going into the close. A lot of you money managers, hedge fund guys, you know, there's a lot of window dressing going on, as you know. So there's probably going to be a little bit of volatility going into the last few hours of today's session. So some of these charts are subject to a little bit of change. But the triple Qs, the chart that I'm still working with, still has a little bit more upside. I'm using Fibonacci levels here. If you're not familiar with Fibonacci levels, I think they've got a lot of merit for a lot of charts. Not every chart I use Fibonacci, because sometimes they just don't have merit. But I think for the Qs, I think we can see that this one potentially has some merit. So I'm expecting the Qs to maybe go and get to 500 before we start to see a little bit more digestion of gains. One of the core thesis that I've been working with over the last few weeks is what happens, you know, for the next 6 months. Now, I would really like to see broader participation. I'd like to see a rotation into the riskiest areas of the market. We've just not had that for the first 6 months of the year, and I think if we are going to get that rotation and that participation from the small caps, then I think the message is still the same. We need to break out above that 210 level. Again, I am utilizing Fibonacci levels here for this particular chart. The micro caps are still stuck under the AVWP levels. Again, if you've been following my work over the last 6 months, you'll know that I've been highlighting this as a problematic technical hurdle for the micro caps. That hasn't changed. We've had another flat out rejection in the last few weeks at these levels. So again, the message is still the same. I think we do need to get above that kind of 120 level to get that participation again from the riskiest stocks in the market. Earlier in the last couple of weeks, we did get a little bit of a spike in credit spreads, which gave me a headache actually around 10 days ago when I was on vacation. But ultimately, it's given another false signal, and we've seen the volatility drop again. So with the VIX being in the 12s, that's an environment I think we just have to be looking at stocks to buy. It's just easier to find stocks to buy. And I know the other side of things, when Obviously volatility is low, you know, buying puts can look attractive, but I think at the moment we've had the suppression in volatility for quite some time, and I'm just not seeing any imminent signs of a corrective phase at this moment in time. Now, obviously everything's subject to change. I do reserve the right to change my approach on 30 seconds notice, but I think at the moment, going into July, I'm not really seeing any major signs of any kind of collapse at the moment. The bond market obviously has been getting a lot of attention. I made a big bottom call on bonds and obviously TLT back in October last year. We got a 20% rally. Since then, I've been honestly very on the fence about what happens with bonds. Like we obviously had a breakdown here, then it's rallied. So it does have the look like now it is building the right hand side of the base, but we are currently down on the day at the moment. But again, the message that I'll be putting to our clients this weekend is really just not to overthink it. And I think the message is, as long as we're above that kind of 91.50 level, then I think you can remain bullish on bonds at the moment. Gold has done a whole lot of nothing for the last 3 months. This is one of my longer term charts. I think this is a chart that I think most of my professional finance managers, money managers, etc. like. It's just obviously showing what the upside targets are. Again, I'm utilising Fibonacci levels because Fibonacci for this particular chart makes a lot of sense. Again, just to re-emphasize, not every chart you can utilise Fibonacci. But again, I think 3200 remains our upside objectives. Now, if you are still here, please do hit the like button. It does help with the YouTube algorithms. It really does mean a lot. It tells me that you're getting a lot of value if you're still here as well. Now, I am about to walk through, I think I've got around 25 individual stock ideas for you. Like I said before, we've obviously got earnings season, which will be kicking in again in the next couple of weeks. So some of the charts I am going to walk through, I think you can add them to your watch lists. I think the charts make a lot of sense. But let's start off with Nvidia, because I think Nvidia obviously gets all the airtime. Now, for disclosure, this is one of our high conviction ideas that put to our clients. A couple of months ago, tradable bottom, it's been working out well. We are now holding on to the 5-week moving average, and what I was saying to our clients in our midweek halftime analysis just a couple of days ago is really just to remain bullish on Nvidia. We've had a little bit of a pullback in the last couple of weeks. Everybody's calling for massive tops and a correction and all the rest of it, but the way I see it is you just remain in the trade for as long as the stock price is going up. So I'm actually viewing this as a healthy, viable pullback at the moment. I would have bigger concerns if we do start to give up the kind of 110 level here. But I think at the moment it looks like a pretty textbook, healthy, viable pullback. We've got Amazon. Looks like it's going to be going out at fresh closing monthly and weekly and monthly all-time highs. Now, again, I'm using Fibonacci for this chart, and I think if the breakout sticks the landing here, I'm working with upside targets here around 223. This is obviously a stock that we've been bullish on for quite a while, but it has been chopping about and messing about sideways for the last few months. But it does look like this month we might be getting a fresh closing all-time high breakout. So again, upside targets here for us are around 223. Lam Research is another one. Looks like it's breaking out. There's logical upside targets there around 1400. Now, obviously, when you look at things like, you know, the market cap, 140 billion, PE ratio is pretty reasonable as well. There's not much of a big short interest, around 2%. So, very solid stock, broke out a few months ago, big cup and handle pattern. It has been basing for the last 3 months, and it has broken out again. So again, we're working with upside targets here. As long as you're above $1,000, I think you can remain bullish. Apple, again, if you've been following the channel a while, you'll know that I made a big bottom call a few months ago when everybody was telling everybody else to start shorting the stock. It absolutely blows my mind when you see all I think the CMTs are probably the biggest culprits in their relative strength charts, and for me, I take a different approach. Obviously, I'm sure like everybody else, I understand what a good company is, and I get the whole Apple lack of innovation and all the rest of it. I understand, but at the end of the day, it's still Apple. It's not going to zero like a lot of folks will have you believe. Big double bottom pattern. Now, what's been happening off the lows? This is the relative strength against the S&P 500. It's been massively outperforming the S&P 500 off the lows. So this for us has been a textbook buy low, sell high chart. It has been working incredibly well. It continues to work well. Yes, it has been a little bit of chop, I think, over the last month. But if we go back to the NYSE Composite and the Dow charts that have also been, chopping about sideways, it makes sense that Apple would be chopping sideways along with the major indexes. So for us, we still remain bullish on Apple, and ultimately, as we work with systematic process, we'll see how far Apple ultimately decides to go. Palantir has been a big one. If you picked up last month's analysis, you'll know that it was a buy low, sell high opportunity. Now, for disclosure, I still own Palantir. I've owned it for quite some time. I see the longer term prospects for the stock, and ultimately still patiently waiting for a further breakout above that $28 level. It's potentially a level that I may look to add to my position. I think my average on it's around 19, but ultimately I want to see it kind of break out above this range, but I'm viewing this as a massive 3-year cup and handle chart pattern. Spotify, again, looks like it's potentially trying to break out. It has been chopping about, over the last month, and just to bang the drum on it with the market, nothing out of the ordinary here. But Spotify, we are still working with upside targets there around 385, but I'd like to see some kind of momentum come in over the next week or two. But it would start to kind of get a little bit trickier if we do start to kind of give up these pivot levels. Tesla, again, made a big bottom call on this one a couple of months ago. Since then, it's been a very messy bottom. I think when I put out the bottom call on it to our clients, central to the thesis was the heavy buying volume that kicked in on this move. But since then, it's been actually quite frustrating. But when you actually look at the numbers that it's generating, it's pushing up against this 205, 210 level. I mean, that's a solid return despite the chop over the last couple of months. But it does look like it's basing a little bit. So if you have missed this tradable bottom, then I think above that kind of 205, 210 level might make some sense if you are somebody that likes to buy breakouts. Same message with Netflix. We actually met our target on this one in the last few weeks, but I think a further breakout there above 700 and things could get quite interesting for Netflix. We would be working with upside targets up around 1,000. Again, I'm utilising Fibonacci for this particular chart. We've got Micron technology now. Over the last few months, I think I started covering Micron in my monthly analysis for social media around 3-4 months ago on this big massive base breakout. Now, I got some messages on Twitter, and look, obviously I understand not everybody understands how to utilise and add Fibonacci to charts, etc. I know it's a tool that I think most professionals use, but for us, as per the chart that I've been communicating over the last few months, upside targets got met running into earnings, and obviously there has been a big dip on the back of earnings. So I'm actually going to be doing a bit more work on this chart, I think, over the weekend, maybe just to try and identify some kind of tradable low in Micron. But at the moment, for our clients, target was met, it's pulling back, and I think now it's really just a case of trying to find a new buying opportunity, buy the dip, whatever you want to call it. General Motors is another one, met our target a couple of months ago, but it does look like it's starting to try and break out now. If you go and have a look at General Motors relative to Tesla, you'll see that it's massively outperformed Tesla this year. And I think if this can, finally get some kind of breakout above these key levels, then I don't see why previous all-time highs can't be a logical target to aim for again, provided the market doesn't decide to fall off a cliff. Now, eBay, again, consolidation over the last month, perfectly normal, perfectly healthy. Big, massive range. Looks like there's a little bit of tightening up here from a technical perspective, and I think if there is a breakout there above that $55 level, then potentially eBay could get quite interesting. There is quite a low PE ratio on this one. It's only $26 billion in market cap as well, but they do have solid 12-month earnings growth, so it is a stock fundamentally and technically that does seem to be aligning a little bit, but in the last 24, 48 hours, if you go and have a look at what Nike has done, Walgreens as well. So there are a lot of names aligned with kind of retail that are, not faring too well. So I would be a little bit more apprehensive, going into an earnings report, just because of, what we're seeing in the retail space. You're seeing some names that are, performing incredibly well and holding up well and continuing to move higher, but you are getting to the other side of things, these surprises to the downside. So that's something to obviously bear in mind with something like eBay going into earnings over the next few weeks. But Uber, again, this has been one of our buy low, sell high opportunities over the last few weeks. It's been working really well, but if you did miss the tradable low, then I think there is another 10% upside there on a breakout above. It looks like about $75, and I think that would bring in logical upsides there around 81, 82. Trade desk, again, very frustrating over the last month, but it does look like it's trying to break out. I am viewing this as a massive 3.5 year base, inverse head and shoulders pattern, whatever you want to call it. But I think with this one, and as the chart says here, this is one of our charts that our clients have been working with over the last few weeks. That it is stalling at the breakout levels. It probably needs some kind of earnings catalyst, I think, to really get it moving. Maybe some kind of positive communications from management, whatever it might look like. But I think that $95 level, I think if it can hold, hopefully going into earnings, there can be another earnings surprise to the upside. Goldman Sachs, absolute no-brainer if you're looking for exposure to financials. It has been pulling back over the last few weeks, but I think provided it holds on to those previous all-time highs around 428, then I think there is logical upside there to aim for. Rocket companies, again, it's another one that's basing. Obviously, if you're looking for some kind of play on rates, then perhaps rocket companies above that 1550 level. Now, what I will say is it's a very risky stock. The short interest in this one is just shy of 15%. So there's a lot of really smart folks that are betting against this, but that doesn't mean smart folks can't get caught with their pants down. And I think if that breaks out above these levels, there's going to be a lot of covering on that one. It's a massive 3-year base. But if you go and have a look at what this chart is doing, it is obviously moving with the bond market. So, pay very, very close attention to that. I think that would probably be the signal to get long. And I think for me, the price levels here are around 1550. Now, Palo Alto Networks, for disclosure, this has been a high conviction idea that we sent out earlier this week. Got a big breakout yesterday on it. It's already up 5-6% depending on where our clients bought in, but For us, the systematic processes, the trailing stop is already up at 315, and we're working with upside targets there around 380. Going back to one of the retail names that I've been talking about, ON. Now, obviously, it goes without saying that the Nike earnings is kind of spooked the market a little bit, especially when you're looking at apparel, sneaker companies, etc. So this pullback in ON, I think that 3750 level is absolutely critical. I think, or let me just rephrase that. I think that 3683 level is pretty critical for this one. It has broken out, but it has pulled back over the last few weeks. It's not been too badly affected by Nike today. I think that's probably the positive to look. But again, I'm hoping that this is a perfectly healthy and viable pullback, but I would have bigger reservations if we did start to break below those key levels. We've got massive company in CrowdStrike. It looks like it's potentially breaking out. I think as long as you are above that 365 level, then I think everything is perfectly fine. The one thing that I would say is last week there was a heavy volume, selling volume on this, so that's obviously something that has caught my attention a little bit. But I think if you are above that 365 level, then I think you can remain bullish on CrowdStrike. We've had a big earnings massacre in Dell. I think everybody and their dog is now looking for opportunity to buy this dip. We actually met our target in Dell going into earnings, and obviously there has been a big sell-off on the back of it. It is holding at the moment its 10-week moving average. I am looking potentially, if it does give up that 10-week moving average, maybe the longer term trend might be the buy the dip opportunity. But I am hoping to see this 10-week moving average hold. But if that does give up, then there's probably a little bit more pain to the downside. But I think fundamentally, I think most of us probably see the longer term prospects. I myself, I've just ordered the new XPS laptop. I like them. I like Dell very much, but a little bit of pressure with this particular stock. Just if you look at the run up that it's had, we recommended this at $45. Monster move higher, but now it's about finding a buyable, tradable low. Tractor Supply Company, lots of shenanigans over the last couple of weeks with this one. The stock obviously broke out of a massive multi-year base a few months ago. They decided to go the woke route, much like the Bud Lights, etc. Big statement from management yesterday, I think, has probably calmed the nerves of investors a little bit. So it is range bound. It is at the low end of the range at the moment. So I'm hoping that this is just going to be a buyable dip opportunity for Tractor Supply Company. We've got Cameco Corp, massive multi-year base. The downside to CCJ is it's actually not been a great investment this year. It's actually underperformed the S&P 500 by, now 7%. But that doesn't mean that the underperformance will continue. I think the chart probably speaks for itself at this point. This is a massive 20-year base, that 15-year base that it's trying to break out of. So again, I think if it can take out that $56 level, then potentially CCJ could be off and running. But I think at this point, again, it probably needs that kind of earnings catalyst to take it above such a significant level for the stock. We've also got Royal Caribbean. Now, again, this is one of our charts that we've been working with. Big breakout over the last couple of months. We are working with upside targets around 200, but obviously with targets like that's not a target that you're going to get in the next month or two. That's a longer term view for our clients up towards the end of the year, and obviously having to navigate elections, not just the US elections. We've got UK elections coming up next week, which are obviously going to move the markets massively as well. But yeah, we remain bullish above that 136 level for Royal Caribbean. This is one of our charts from last week actually. I thought I would just add it into my social media work. I think most of you know I love buy low, sell high technical charts. I think on good companies, I think, you know, when I look around, you know, social media, for example, you know, I get really annoyed when I see a lot of the CMTs and the technicians that, you know, like to mock fundamental folks for looking at things like market cap and PE ratios, etc. I take the opposite view. I like to identify good companies like SLB and just overlay my technical skill set to it. So, you know, buy low, sell high opportunities on good companies and good stocks makes a lot of sense to me personally. Going back to what I was saying at the start, I'm personally more of a technical fundamental guy, technical investor. So yeah, SLB has been really good over the last couple of weeks, and ultimately we'll see how far it goes. And we've also got TJTX, big Stan Druckenmiller 13F holding. So again, that might be appealing for those of you that pay attention to Stan. Big short interest in this one as well, up around 24%. So, you know, if that does break out, then potentially there's a lot of short covering to kick in there. And we also have Tencent Music as well, which is trying to break out. It's been a very sloppy, very choppy chart, I think, over the last few weeks. It did meet our upside targets a couple of months ago. We recommended it at 950. But if it can get some kind of move, I think obviously the whole China thing, you know, as somebody who just lost a lot of money in the Macau casinos and spent a bit of time in Hong Kong, I understand kind of what's going on in China at the moment. Just from general observations, I think, especially if you go to Macau, you'll see that, you know, money is being thrown around everywhere. It's, you know, Monday afternoon and the casinos are absolutely packed. Everybody's playing all the games which are, you know, $50 minimum buy-ins for any game, minimum bets on any game. It's kind of like Vegas on steroids a little bit, but I think, yeah, Tencent Music, I think obviously aligned with China, really needs to kind of catch that bid. So I hope you've had a lot of value from this analysis. I did say at the start that I had a little bit of an announcement to make. We have just opened up our 4th of July summer sale, which will give you 20% off any membership over the next few days. If you are new and you're wondering who I am and what it is I do, feel free to jump on to our website at honeystocks.com. All of our transparent timestamp work, it's all laid out. I only use my own charts and my own data. We provide memberships to all of our premium work, which includes our premium weekend analysis every weekend with our best charts and our weekend hot list. We provide all of our highest conviction investment ideas. Now I will show you what that looks like in just a second. We provide access to our midweek halftime analysis. We provide access to a wonderful community of professionals, investors, traders from all across the world. Provide access to all of our chart books, which cover all of the most liquid stocks, ETFs and commodities from around the world. And if you are someone that is new to technical analysis, we also provide access to our complete technical analysis program, which I'm also told is incredibly well built, thought out and very useful. But just to quickly show you what our high conviction ideas look like, this is obviously, I think I went over this a few minutes ago just with Nvidia, massive gainer, TKO, solid move. We've had Coinbase, which was massive. We've had Spotify, which again has been absolutely massive. Valero Energy, which was massive, Tesla, massive, Meta, massive, just big bottom calls that I made over the last couple of years. But I do lay out, for complete transparency, all of our high conviction ideas laid out on the website, so please do check out types of stocks that we like to recommend, or the types of stocks that you like to buy. I have laid everything out for the last 6 years, so feel free to go and scrutinise that. But I think my work is probably a good fit if you are mid-term approach, if you are maybe sick of losing at day trading, if you're looking to build with systematic process, maybe you just want to be part of a community and you're sick of hunting around social media and maybe want access to a professional analyst, maybe my work's a good fit for you. But if you are still here, thank you very much for sticking around to the bitter end. Please do check out the website, and thank you for watching. Have a wonderful weekend. Thank you.